we want to show you how to move taxable assets through the Voluntary Contribution Program, or VCP, and then roll the funds out into a Roth IRA. Please see our other videos for a clearer understanding of how the Roth can produce tax-free growth. Let's consider the fundamentals of the Voluntary Contribution Program. It is the employer-sponsored retirement plan just for CSRS and CSRS Offset. If you're a FERS employee, this program is not available for you. There are other planning techniques you should consider. This is a very unique program, and CSRS are some of the only people in America who can create a rather large $100,000 to $200,000 Roth instantly with little to no tax consequences. Employees contribute after-tax dollars into the trust fund via either lump sum payments or salary withdrawal payments out of your normal paycheck. Who qualifies for this program? First, you cannot have any outstanding civilian service credit deposits. Be careful. If you had a break in service or temporary service, maybe in the beginning of your career, you will need to clean that up. If you need to pay an outstanding deposit or redeposit before opening the account, see your HR department. You must be currently employed or have an application for retirement that is being finalized, and you may not have received a refund of voluntary contributions during the current service. Step 1. Fill out SF 2804. Send this to the personnel office. Do not send any money at this time. This form establishes an account for you with OPM. 6 weeks could pass before you are given an account number. You may then begin funding the VCP. You can make contributions through pay.gov. You can find it on the website, the Voluntary Contribution Deposit Form under the OPM forms. Fill it out, press Submit, and enter your credit card or checking information. You do not have to create an account on pay.gov, but if you use it more than once, it will save you some time. Yes, you can use your credit card to funnel money into the account and get full benefit for your Sky Miles or any other program. How much can you contribute? The amount you contribute to the VCP cannot be greater than 10% of basic pay. What if you overcontribute? Let's say you have contributed $200,000 to the VCP, but your earnings are only $1.9 million, so you are only eligible to contribute $190,000. $10,000 that you overcontributed will simply be refunded to you without interest at the time of withdrawal. The amount you are eligible to contribute is verified when you make the withdrawal, not at the time of contribution. This validation process of your lifetime earnings could take substantial time. Payments can be made directly to you, or you could roll it over to an IRA or Roth IRA. The money can grow tax-free from that point forward. You do not have to wait until retirement to transfer funds from the Voluntary Contribution Program to the Roth IRA. It can be done immediately after making contributions. Now, where does the idea come from that we can make this move straight into a Roth IRA? The VCP is a 401 program, the most common being the 401k. There are a host of employer-sponsored plans in this section of the code, in particular, Section 824. The Pension Protection Act of 2006 allows distributions from qualified retirement plans, such as a 401, to be rolled directly to a Roth IRA without first going through a traditional IRA. It was this act that has enabled such opportunities to be carried out smoothly and seamlessly for CSRS employees. Since the VCP to Roth process is after tax, you do not pay taxes on the basis of this transaction. If you have earned $2 million over your lifetime, you can place $200,000 of after-tax cash into the VCP and then roll the funds into a Roth IRA. If while funds were in the VCP, it earned $1,000 worth of interest, the only taxable portion at this time of conversion would be that $1,000 gain. Let's briefly drill down into where you can get the funds for the VCP. After taxes are paid on assets, you can use the funds. Do you have stocks, mutual funds, CDs, bonds? Are you currently receiving a 1099 for earnings on investments? Moving such funds through the VCP to the Roth can remove all future 1099s. Understand the sale of appreciated stock will have tax consequences, but remember the growth on that Roth will be tax-free forever. Consult with a tax advisor before liquidating assets to fund the VCP. Often we are asked, will this opportunity be available in the future? Although there is no year-end deadline to complete this process, we have no assurance that this opportunity will remain available indefinitely. As we all know, Congress has authority to change any law, so do be cautious of beginning this process and letting it go on for multiple years. In summary, every CSRS should seriously consider moving funds into a tax-free Roth account using the VCP as a conduit.